understand the economy, you have to understand human nature.
This podcast is powered by Acast.
How are you doing there? I am accusing John of going back on the smokes, but he claims he is just vaping, and he believes that vaping... Are they pungent vapes or aromatic vapes, John?
I go with the mint. The mint is because it's kind
You go
of
with the mint.
so like then I can cut out the chewing gum as well.
Oh, okay. So I didn't realize you were back at the El Harry's. Anyway, how are you headed? All good?
All good here. Still in France. It is amazing.
Have you applied for your
French?
French passport?
That's next on the list. It's
Really?
fantastic here. It's after, but it's really hot and lots of mozzies. But the walking is just terrific.
Well, I'm not sure if you were watching the other day the opening ceremony of the Olympics, and there was a massive
I missed
hoo-ha.
it.
The culture wars were sparked by the opening ceremony of the Olympics, where quite bizarrely they had obviously there's loads of boats going down the Seine and all that sort of stuff, right? And all the various different teams and all that sort of stuff. But then they did a little vignette, little sort of sidebar thing of what looked like a bunch of cross-dressers, maybe old school transvestites, not quite sure, but fellas with beards and boobs, that sort of unusual combination.
Right.
And then they decided to sort of have a final Last Supper. So if you don't know Leonardo's Last Supper, right, you've got Jesus in the middle, you've got all the apostles on the side, right? They're the same thing, but I think it looked pretty blasphemous. And I was just...
What were they trying to say?
I don't know. I was talking to one or two people who are losing their head completely. It's as if, the French are just, poking the culture war beast all the time, and doing it. So there was a lot of, there's 2.5 billion Christians in the world. They wouldn't do that to Muslims, sort of stuff. And I've always found this, when you are in a country like France or anywhere, you're kind of buried in your own little thoughts. You're not even watching things like the Olympics, which is kind of lovely. So the biggest thing is going on and you're just walking around the Pyrenees.
Absolutely. That's exactly what's happening. But I have to say that in all those kind of opening ceremonies, whether it's the Olympics or the World Cup or whatever, that I don't think they'll ever beat Danny Boyle's London Olympics opening. That was just unbelievable.
Well, it's quite funny because all the coverage from the UK has been, not quite as good as our Olympics. Not quite as good as Ian Jury in the blockheads. Not quite as good as... So it's as the Queen and James Bond, all that sort of stuff.
Yes,
But listen, John, today we are going to talk about one of the most consequential moments in economics and finance, which is the arrival of what is described as e-banking.
Right.
The other day, Revolut, which is a Lithuanian company, don't forget.
Actually, I didn't know that.
Yes, it's a Lithuanian company. It got its license in the UK. It has had a license in Europe since 2021. It is being mandated by and watched over by the European Central Bank, but it now has a license in the UK. And this is a company. You know the way we always say that economics and cycles are a Schumpeterian function of technology, disruption, adaptation, and on we march.
Yeah.
So Revolut started, your kids probably have Revolut, do they? I mean, your family is Revolut.
Yeah, sure, we all have it. Yeah. It's even a verb now. I'll rev you.
Exactly. So I want to talk about Revolut just in the context of what it might do in the global markets, also in the Irish market. For example, I'll give you a mad statistic. Revolut has 2.7 million Irish customers. That's 3/4 of the adult population.
Wow.
And so what started as basically, in effect, a travel card, right? Making basically payments easy, has now gone into a bank, which will now be lending, which will be in the mortgage market. So it's the evolution of a bank, and we're seeing it in real time in front of our eyes. Whereas a bank like Bank of Ireland and AIB would have taken hundreds of years to have gone from taking people's deposits and being a medium of exchange and basically being a clearinghouse for trades to becoming a fully fledged bank. This company is doing this in a matter of years, and it's doing it amazingly with no physical assets at all.
But do you know what's amazing? I don't know if it was a conscious marketing strategy or part of the marketing strategy, but they got Revolut into young people's phones. So it has become the main way where parents give their kids pocket money.
Exactly.
And so it's got them at a really young age, which is really smart if that was part of the strategy. And now it's just become this thing. You know yourself, if you're out at night and with people and you're sharing a taxi and there was always that, oh, here's a fiver, here's a tenner. Or the last guy in the car gets stuck with the bill.
Gets stung, exactly.
So it's brilliant that, it's this Revolut, Revin are all over the place. It's brilliant.
No, it's extraordinary. So this podcast is going to be called The Napster of Finance, because Revolut is disrupting finance and banking and money eventually, John, in the same way as Napster began the process of disrupting the music industry. It's taken a while, and the reason it's taken a while is that banks need to be regulated because, as we know, in Ireland in 2008, they can go bust, and when they go bust, they drag the entire economy down with them.
Yeah.
But we're going to take the opportunity to talk about Revolut, but also against the background of the new book on money, John, because a huge part of the story of money is the story of banking. And a huge part of the story of money, and this is a really extraordinary thing, which is that the vast, vast, vast majority of not just people, but economists cannot answer the basic question, which all kids ask their parents is, where does money come from? Where does it come from? Who creates it? Who creates it in the economy?
The trees, obviously. It's a money tree.
Exactly. Jack and the Beanstalk. There's a money tree, right? But that idea, John, we're going to use the Revolut story, which I'm going to flesh out just now, okay, to tell the greater story of why economists don't understand how money actually gets into people's hands, and how the story of money that is taught in universities and in schools and in what I would call the mainstream consensus of monetary economics is a fiction. And this is one of the chapters in the book, which is basically, where does it come from? And I think the Revolut story is emblematic of a moment where you think, hold on a second. So this e-bank can create loans and it has deposits. And from those deposits, it create loans. And those loans go into the system. And those loans come back in as deposits eventually. And so what you see is these interesting, unusual Lithuanian, and the reason I say Lithuanian, not very many companies come from Lithuania. Lithuanian-based tech companies, fintech companies, are changing the way in which money is created in society and go to the core of why the general mainstream view of how money created is wrong. So we're going to do all that sort of stuff. All this, by the way, of course, John, is in the book, Money, Story of Humanity, which is out on the 11th of September.
Yeah.
Apparently, we're doing a live podcast tour about it. You're going to have to read it too. I'll have to get the audiobook ready for you before.
Yeah, exactly. Yeah. I'll wait for that. But anyway, Macker, let's come back, as you say. It seems like a pretty fundamental thing for economists to understand, where money comes from and how it all works. You
would imagine, John, but I'm going to let you into a bizarre little secret, right? Up until the 2008 crisis, the vast majority of macroeconomic models that were used to model and forecast the economy, and that's to predict recessions or depressions, booms or busts, didn't even have a variable for money, okay?
Yeah.
They were what I would call hydraulic models. It was like, so you pull this lever and this happens, you pull that lever and another thing happens. And then, of course, when the entire system collapsed precisely because of an inability or an unwillingness to understand money and what it was doing in society, then suddenly said, oh my God, let's think about this. So what is fascinating is the fact that the majority of mainstream macroeconomists believe the idea, or at least teach the idea if they don't believe it, teach the idea that the central bank controls money. That the central bank, in effect, run by a couple of pointy heads, says, this is the amount of money the economy requires because we have figured out what the level of demand is going to be, what the level of unemployment is going to be, what the level of growth is going to be. And we will then give this amount of money to the commercial banks and they can then lend that out.
Well, that's kind of fair enough because they're the fellas who print the money.
They are the fellas who print the money, but that's not how it happens at all. Right? That's actually not how it happens. It's sort of reassuring because everybody wants to know that somebody's in control and somebody has the levers of power and there is some sort of almost Wizard of Oz type character behind the curtain that is actually controlling everything.
Yeah.
But actual fact, the entire history and evolution of money is something that is a quite different story.
Okay. So where does Revolut then come into this picture?
Right. Okay. So that's like this is a fascinating case. So what we have is a fintech company, basically a technology company that started as a platform, basically in Lithuania because it was incredibly difficult and expensive to transfer money from Lithuania to other countries. And of course, Lithuania is a country of immigrants, as we know. In Ireland, we have loads and loads of Lithuanians. So they were basically saying, how do we figure out a system which can work off phones, which acts as not so much a bank, but just basically a Western Union, Western Union, where you transfer money. It's basically, in effect, Western Union using a mobile phone. So that was the basic idea. And this began to grow and grow. And as you said, now it's a verb. So your kids are going to rev you, right? It has become a verb. Yeah. And of course, the key thing for marketing and branding is when your company becomes a verb, you've made it. Like to Google, right? That sort of idea. You're in, right? That because you've become part of the day-to-day.
Or in old money, it was Hoover.
Exactly. You're absolutely right. A Hoover was actually, I didn't even know there was such a thing as a vacuum cleaner for years, right?
Yes.
Same
exactly.
sort of idea. So last week, the Bank of England gave a license to Revolut. So I'll just give you a few statistics. Revolut has 9 million customers in the United Kingdom. It has 45 million customers worldwide, which is phenomenal. It has now got, it's probably going to, because it's got the license in the UK, it's probably going to issue what they call an IPO, an initial share offering. It's going to value the company at $45 billion. Just to give you a sense of what that puts Revolut in contrast to, let's say, Irish banks, it means that Revolut is 4 times bigger than AIB. AIB has a market cap of about 12 billion.
Wow.
And a little bit over 4.5 times bigger than Bank of Ireland, which is a market cap of 10 billion. Now, AIB and Bank of Ireland took, in the case of Bank of Ireland, about 200 years to grow to that size. Revolut has grown to that size in 3 years.
Yeah.
Okay. So you're talking about something really, really phenomenal. And now that they've got a license in the UK added to their license in Europe, what they can do is they can take, for example, when you Revolut somebody, you have a Revolut account in which there is money, right? So there's a pool of money. So you Revolut to your kids.
Yeah.
But they are the custodians of that money. Fascinating thing is Revolut never pay you any interest rate on that.
Yeah.
Okay? Unlike other banks, they don't pay you any interest rate. So their cost of capital is free. Their cost of capital is free. They're getting your money.
Right.
They're using that money. Now, of course, what they can do now is they can take that money, they can put it on deposit in either the Bank of England at 5.5% on deposit at the Bank of England or the ECB at about 3.5%. They can now, with the bank, begin the process of lending out to people. And they've already said that they intend to make a big splash in the Irish mortgage market in the coming 12 months. And of course, the reason they can do this in a more nimble way is they have all the technology because they're doing everything through the mobile phone. Everything through your mobile phone.
But they're still subject to the same kind of rules that apply to all the other banks.
Yeah, no, they are. They are, absolutely. It's just that they don't have the same cost structure. So they don't have any buildings. They don't have a big staff overhead. They don't have pensions for their staff. They don't have all these things. So basically, you have the legacy banks are basically like bits of the old economy, right? And everybody knows that because dealing with Irish banks is such a pain in the arse. We know that, right? There's so many bureaucratic this and that, and sometimes the software doesn't work, and sometimes the apps don't work, and all that. Revolut seems to have basically jumped a generation in technology, and as you said, they've jumped a generation. Much more importantly, in terms of their consumer base, their customers are young, and once you get young customers, you're in the business. They're also growing at 27% per year in Ireland, 27% per year. And around 40% per year worldwide. And fascinatingly, it's the first time I think I've ever heard this, their growth rate is word of mouth. It's almost like an album. It's almost like a band, right? When a band breaks through, when a band goes from being an obscure band to a band that everyone's listening to, or a movie or whatever it's be, it tends to be word of mouth. It's the same way as writing books, John, or doing anything to just anything.
And there's the cool factor involved as well.
It's ease, it's cool. It's not the banking that your dad did.
Yeah.
Do you know what I mean? It's your sort of banking. And this is the way younger people are looking at this. So if you take the whole thing together, right, they will probably end up being a key player in the banking business and the creation of money business. Because at the end of the day, commercial banks create money, right? And the reason I say this is the following, John. If you decide to get a new car, for example, and you go into Bank of Ireland, okay, or AIB, or in the UK, Barclays or NatWest. By the way, Revolut in the UK is now bigger than Barclays and NatWest. And those two banks are over 200 years old.
Wow.
Which is phenomenal.
That is
yeah,
incredible.
I mean, it's a huge, huge, huge change. They have 47 million customers worldwide, of which they reckon about 25 million are active users all the time. So that's their base.
Yeah.
So that's a phenomenal customer base built up over a very short period of time. Now, what they will do is they will disrupt all the models where present-day banking are involved in. And for a long, long time, the banks were trying to count on the central banks and the regulator to keep these upstarts, these kind of barbarians at the gate, out of the banking market. And in so doing, give the banks a sort of almost a quasi-monopoly over people's money. And of course, you've seen that in Ireland, where the big banks in Ireland, once interest rates started to rise, for example, from 0 to 5%, which we talked about last year, people were naturally saying, well, okay, if the interest rates are rising, that's income on my savings. But the banks didn't hand that over. And they basically shut down this process whereby your money generates savings. And this is why loads and loads of people all over the West were like, well, what's the point in saving? Because we don't get any return on it. So the banks in Ireland and all around Western Europe were making money, not because they were lending out and being judicious, smart lenders, but because they were actually sitting on the income of depositors, which was accruing simply because when the banks take your money, John, if you deposit money in the bank, they just go to the ECB and put it on deposit. And if they're getting 3.75% on deposit, that's free money for them. And in the UK, they were getting above 5% deposit. So Revolut have come in and they're going to smash that market. They're going to actually realize that that's where the juice is, in effect.
But one of the legacy parts of the old banks was the fact that they actually stored money. They had physical safes where they put their money in. So there was that kind of security perception that that's going to be harder for the likes of Revolut to address.
Well, I mean, again, this is one of the myths we're going to smash in this podcast, John, which is that banks are safe deposit boxes. What banks do, but basically when you deposit money in a bank, you think that it's there for safekeeping and it's actually in a safe deposit box somewhere and nobody's using your money.
Yes, a little room, yeah.
Exactly. You think it's a little room, exactly, with fellas with guns or cudgels outside it and say, no, that's our money, right?
Padlock on the outside.
But in reality, what you're doing is you're lending to a highly leveraged speculative entity. And that was evidenced very, very clearly all around the world in the last big financial crisis, where the banks ran out of money. Now, how could they run out of money if they had a safe, John? The reason they ran out of money is they were spending your money and creating money off the back of it, whole scale, by what they call leverage. And basically, they didn't give a damn about depositors' money. And the reason that all banks in Ireland had to be actually saved was precisely because they didn't have the money they pretended to have, right? They actually ran out of the stuff, right? And I suppose this is one of the fascinating things about writing, about banking and money, is that you begin to disentangle who actually creates money and who doesn't, and where the story that we are told deviates from the actuality of what is happening. So if you go all the way back, John, banks started their lives in the Middle Ages, where rich merchants who would have had loads of coins and gold realized, you know what, it's a bit of a pain in the arse. If I'm trading with John in Avignon and I am David in Florence and we're doing a deal together, the problem is every time we clear the trade, if I buy, steel or horses or whatever I'm buying off you, right? I have to physically go to you with a bag of coins. And the reason this was dangerous is because there was lots of thieves around.
Yeah.
So they said, why don't we give this money to somebody who actually has a big safe and has a few fellas with cudgels and a few muskets and will actually be safe there? So initially, the banks were simply as safety. Now, what happened was the bankers themselves realized one thing was bizarre, which was that the rich merchants who deposited money in the banks, over and above needing that money to clear trades, didn't seem to be that worried about who had their money, in the sense that they thought they never really come looking for their money back, or at least they don't come looking for all of it back. So the banker said, that's interesting. So the money's sitting in the vault here. These lads are quite happy not to actually want it all back at any one time. In fact, we've done a little, run the numbers. We've done a few Fibonacci sequences on this thing. And it's only about 10% of the time that they come looking for their money. So that means about 90% of the time and 90% of the money is sitting there doing nothing. Why don't we take that money and we lend it out to other fellas, right? And we don't tell anyone for a while.
Yeah.
And this is the beginning of what's called fractional reserve banking. And fractional reserve banking is the elixir of money creation. That's where money is created. So what happened was the banks said, okay, if John doesn't want his money, well, maybe David wants his money and I can lend that stuff out to him at 5% interest rate, and that's great. So suddenly I get your money, right? You're told to look the other way. And the banks realize that if I just keep about 10% of this, I can satisfy John that the money's still here. And there won't be what they call a run on the bank. And the reason that it's called a run on the bank is because it's not really an amble, it's a run because people panic. So there'll be no panic. So then they lend the money out to me, and then I spend the money. And some of that money then that I've just spent comes back to them from the people whose stuff I've bought with your money, John, and it goes back into the deposit of the bank. And so in that way, the loans create their own deposits, which create their own loans, which creates the dynamic of what they call fractional reserve banking, which is basically how banks became money machines, right? Now, the reason this was important was, A, this is how the embryonic consumer economy that we know now began to develop. But number two, and this is a crucial part of the story, it broke the link between the king and money. So up until the banking system, the king had a thing called the mint. And you brought your gold to the mint and he stamped his head in it and away he went. So he controlled the amount of money out there. Once the banks get into the game, they begin to drive a wedge between the king and money. And they understood, the bankers understood, and the merchant bankers, that money had its own enormous potency. And then they came up with another thing. They came up with these things called bills of exchange and letters for credit to just put your head around these things. It's a bit like a checkbook, right? So when you think about a checkbook, when we were young, our mothers had checkbooks and they would write a check, for £50, okay, or for 50 punts, right? And that check was good, as good as money. But it wasn't money. It was a promise. So when your ma wrote a check for £50 to get the car fixed, right, in 1985 or 1990, right? She gave the check to a mechanic. The mechanic accepted that was money, but it wasn't money. It had nothing to do with the money. All it was a promise on behalf of the bank to honor the debts of Carmel Davis.
And of course, he had to wait 3 days to actually get the cash into his account.
Exactly. And why did you have to wait 3 days? Because the bank took interest rate for free. It wasn't actually a transaction. It was just a way of actually taking money for nothing, which is amazing.
Right? Okay.
They call it the little clips of money at every stage, right? And then, of course, you think, well, how does that begin to evolve in a system where you get lots and lots of banks doing this? What you see is that the banks create the money out of nothing, based on a promise that you will pay, based on a universal belief that money is valuable. So this is the great sort of slightly theological nature of the book I was writing. That, money is like faith. You either believe it or you don't. And if you believe it, like if you're a mass-going Catholic and you believe that, I really believe that, when the priest goes up to the tabernacle and does the hocus pocus, that the body and blood of Christ, or the body is actually transubstantiated, John, into the flesh of Christ. You go, you take your communion, right? If you believe all that stuff, then it's true. It's only when you stop believing it. It's only when you stop believing it beccomes a little faintly ridiculous, right?
Yeah, but this is also what the Bitcoiners play on as well, is that, they believe that cryptocurrency has value, and it does has value because it's bestowed on it.
Well, they believe it, but nobody else does. That's the interesting thing. So it's a bit like a sect. It's a bit like a bizarre religious sect. It's a bit like one of those, it's like the Bitcoiners are the kind of the Amish of finance, right? that within the sect, they really believe this stuff.
Yeah.
But nobody else does. Okay. And the interesting thing is the value that they bestow on Bitcoin is expressed in dollars, which is the currency of the mainstream. So this is one of the things.
Yes.
But look, as I've said with Bitcoiners, do what you like. Spend all your money in Bitcoin. That's all good, right? But what I'm coming back to is real money. And of course, at the core of this is this very strange dilemma, because the banks create money out of nothing. The central banks pretend that they are in control. We go along with that until there's a crisis. We realize the central bankers are in control, and we go back to square one and we start again, right? That was actually the history of money. And then at the fundamental core of it is this idea, John, of whether money is public or whether money is private. Now, the Bitcoiners of this world and crypto, and it's not just crypto, it's every other person who's tried to come up with a different standard of money over thousands of years, has basically always wanted to privatize money. To say, I will issue the coins, I'll issue the tokens, and everything will be hunky-dory. But if you look at the real material, consequential, and stable history of money, it's always public. Money is a public good created by the state in the same way as the Gardaí are a public good. They're a police force, right? Okay. And when shit really hits the fan, you mightn't like the coppers, but you do go to them if you're robbed.
Yeah.
It's the same idea that part and parcel of democratic countries is that the money is public, issued by the state. And that money is made whole by the fact that the state says you can pay your taxes with this money. So paying your taxes is actually the little bit of magic that makes money real. So the day in which a country says to me, you can pay your taxes in Bitcoin, then I'll be interested in it. But if they do that, they cede probably the most important weapon in the arsenal of democratic countries, which is the ability to create this phenomenal technology called money. And this is the whole stuff that's going on at the moment all the time, John.
Okay, Mark, let's take a break, because I want to come back and ask you about this whole idea of the Napster of banking and where that's going to take us.
Okay, cool.
Mark, we started off talking about Revolut, and you said that Revolut is now, or could be seen as the Napster of banking. But before we get into that, you mentioned in passing, very blasé-ish, a chap called Fibonacci and the Fibonacci sequence. Who? What? What is that? What's all that about?
All right. It's the midsummer heat, John. It's getting to us. The midsummer heat is getting to us. So Fibonacci is the name, the better known name of a fella who was called Leonardo da Pisa. And I make the case that without Leonardo da Pisa, there would be no Leonardo da Vinci. So that's how big this geezer is in the world of mathematics. Right. So very short segue, right, into medieval Sicily, John. Sicily, center of the Mediterranean, unbelievably dynamic trade center, populated by Normans. Think about this. Muslims and Byzantine Christians, right? So the three big tribes, okay? So Normans being Roman Christians, Muslims being Muslims, and Byzantine Christians being Orthodox Christians, and a small Jewish population. So this is in 12th and 13th century Sicily. Now, Sicily is not a place
in Syracuse, was it?
It was in Syracuse and Messala, right? And Messala is the big city there, and everyone thinks Messala sounds Italian, but actually Messala means Marsa Allah, which means the mouth of Allah, the harbor of Allah. It was a Muslim name, right? So you have Palermo, Syracuse, and Messala being the three big cities. And simply put, Fibonacci was a young man, and he is observing something very bizarre, John, which is on the docks of Syracuse, the very town you talk about, right? Which was the original base of the Orthodox Christians in Sicily. He found something strange, which was the Arab traders. The Arab traders were able to work out something in their heads called fractions. And so they could express incredibly quickly, dates, vis-a-vis raisins, vis-a-vis olives, vis-a-vis related to fish. They could do all these calculations in their heads. And he's thinking, what the hell is going on? So much so that the Christians thought the Arabs were actually infused by a magic because they could come up with this stuff.
Wow.
And the reason the Christians were completely confused was the Arabs were using Hindu Arabic numerals and algebra, which they had imported from the Indians in the 6th and 7th century via Persia. Extraordinary story.
Wow.
So Fibonacci was originally from Pisa, but he found himself down there because his dad was a trader and he learned mathematics and algebra from the Arabs. So the Fibonacci sequence and the Fibonacci mathematics is basically the basis of our mathematics. So that's who Fibonacci was. A very interesting guy.
Right,
and he wrote a really interesting book, John, which I will not inflict on you, called Liber Abaci, which means the Book of Calculations, which was written in just the very beginning of the 13th century. And that forms the basis of our mathematics. So when you look at money and the amplification of money, there are these sequences which are predetermined in maths, and Fibonacci was the guy who came up with them.
I'll wait for the audio book of that too then.
Anyway, it's a fascinating story. It's actually part that's one of the hinge chapters in the book as well, is how the Muslims gave us mathematics. But they took it from the Persians, who took it from the Indians. And I'd say at the end of the day, it all came from China. Because when you do a big book like this, you realize everything came from China. Everything, right? They did everything first. Everything first, you know?
Well, it's fascinating stuff.
Yeah, it is. But Europeans are like people at the very, very end of a sort of a pipe, of an intellectual pipe that starts in China and gets pushed through all the way through. And then, of course, we have a much better branding department and a marketing department. So Europeans take Chinese ideas and pretend they're our own. That's the history. I realize that's the history of innovation now.
Well, fast forward now. Let's fast forward now to Revolut. And you described them as the Napster of banking. So like Napster, they were the first of the music streaming platforms. So if there's Napster, there's going to follow, you would imagine, a Spotify of banking and an iTunes of banking and a Deezer of banking and all the rest. So where are we headed? Is this going to be the end of traditional banking, the AIBs and the Barclays and all those guys?
Yeah, I think it will. I think that, we know that if you go along the main street of any Irish or British town, for example, I suspect it's the same in France, John, but I'm not that au fait with it, right?
Yeah.
But that you will see the nicest building, usually Edwardian or Victorian in our case, or even Georgian in our case, in the town was the big bank.
Yeah.
At the top of the town, like a country town in Ireland, a market town with the big, solid bank, right? They're all being sold off now, okay? Those buildings are being sold off because there is no banking. There are no bank managers. There is no, let's sit down and talk to the bank manager, because banking is now gone online like everything else.
Yeah.
So I would say the holders of the flame, as you'd say, so for example, in the music industry, they would have been what? Apple, Sony,
BMG, all those guys, yeah.
Yeah, and they were making their money from a business model which involved identifying certain bands, giving the bands a certain cut, probably assuming that of every band you sign, one makes it, but that one band that makes it sells enough CDs, enough albums for you to make money, right?
Exactly.
So you have a chokehold on the business. And then once that band is doing well, you push all your branding and marketing, advertising behind that band, so you solidify the gains. So in the same way as the band creates its own fan base, you then share that fan base with MTV videos and all that good stuff.
And merchandise, a whole lot.
Yeah, and you make money, right?
Yeah.
So imagine that the banking system is not a similar structure, but has evolved into a structure like that. It's very, very clear. Once kids start using another app, it's over. As a general rule, the commercial products tend to be defined by demography. So our generation will continue to have an account in Bank of Ireland or AIB. And what we've noticed over the years, John, is that banking is what they call very sticky. And by that, I mean that people of our generation and older don't tend to change their banks or their deposits. So if you started your life at 20 with your first paycheck and you had an AIB account, chances are at 50, you still have that account, right? And you still have that identification with AIB. So that meant that deposits were sticky. They didn't leave. So that when competition came into the market and a bank, for example, would come in Ireland and say, look, you know what? We're going to give you 5% interest, as opposed to AIB or Bank of Ireland is going to give you 3%, you didn't see the same amount of money moving as you would have expected in free market economics. Why? Because people are creatures of habit. And that's why the banks threw so much money at keeping deposits as their fundamental foundation for business, right? The coming generation, the Elizas of this world, right? They don't care about that stuff, right? They have no loyalty to banks.
Yeah.
They just think if this works, if this doesn't work. So I think what's going to happen is the large banks will be, in a way, mugged by the likes of Revolut. And the reason I say mugged, because they are still thinking about their depositor base of being 45 to 50 plus, right? But where the real action in banking is people under 45. And that's where Revolut are.
Yeah.
And that's where Revolut are making the gains. And that's where they're going. Like, as I said, they're, 3/4 of the Irish adult population has a Revolut account, which is phenomenal.
Yeah.
So I think you're absolutely right. I think this, as Napster spawned Spotify, as Spotify became dominant, we'll see the same type of things happening in finance as well. And of course, there'll be competition and there'll be different options. And then that's a bit of a worry, because technology always leads to very rapid acceleration in monopolistic characteristics in markets. And by that, I mean, one big player comes in very, very quickly and hoovers up everything. So that's where regulation will have to be quite adroit and quite nimble, because the last thing you want is all the money of all the people being in one institution, because banks fail. Banks go bust.
As we've seen.
Yeah, and so you'd have this, it's this, they talk in economics of key man risk, like when everything revolves around one person or one institution, those markets are very, very risky. And so I think that what we see in Revolut is, like we always see, John, we kind of conclude here, you get the disruption phase, which is celebratory and is quite exciting and is quite energetic. And it's got almost a sort of a usurping revolutionary feel to it. And then in the same way as the French replaced, just because you're in France, a king with an emperor after the revolution, after all of the upheaval, you end up having Napoleon, who wasn't so much different from fucking Louis XVI at the end of the day, although he was much more clever and he was better at lots of stuff, right? Just keep it with the Bastille Day, because we're in France, it's the Olympics. The French went from revolution, the guillotine of the king, the terror, the great revolutionary period of the 1790s, and by 1804 or 5, they were back having an emperor. Back to square one, in effect.
Yeah.
And on we go. So I think that the same thing will probably happen in banking. We're now in the revolutionary phase, John.
So AIB might be okay at the end of the day.
It'll be just called something else. It'll be called something else.
Exactly.
It'll be a Napoleonic approach to banking, John. I'll talk to you tomorrow.